Right, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. So we're going to get started with our analysis of the markets. Like I said, man, this has been for me a very, very, very frustrating, frustrating session for me, and week really. It's been just a really tough week for me. I got stopped out of a couple New Zealand trades overnight. I added to, being basically to my New Zealand exposure by shorting some New Zealand dollar last night. It's been extremely resilient at this point. And the dollar Canadian's finally starting to find a base, which is good. But I've given back a lot of gains from the last couple of weeks, and it's been that's tough when you do that, especially when you work really hard to make the profits you make, and then you just give them back so quickly. That's been really the case for me this week, and giving back a couple weeks worth of profits has just been extremely frustrating. But the Kiwi dollar has been crazy, to say the least. Fortunately, I picked up a couple of decent trades, and I'm in the peso, real small, but that's bounced back kind of nice, back towards break even. US dollar, Norwegian krone has been good. I left the euro off the table, which was just completely stupid of me. That was a real dumb mistake that I made last night. So, and it's because I had my focus on so many other things that I'm like, I don't even want to deal with the euro right now, which was just a really bad decision on my part. But hey, that happens, and I'll get through it. We'll get through it. And as a trader, the most important thing about it, for being a trader, what I've realized over the years, it's not necessarily your trading. It's how you bounce back from adversity. How you bounce back from adversity is so important to your success as a trader, in my opinion. And you are going to have adversity. So if anybody tells you otherwise, it's just so easy, and it's not. And there will be tough times, and when you have tough times, you have to be able to buck up and get through it. And I really don't have much sympathy for whining and crying and sulking, because if you have those types of character traits, they are flaws as a trader. They're straight up flaws. So I don't deal with that at all. I don't deal with it at all. And so anyway, so the euro did exactly as we had planned. And it's so interesting. Yesterday I sat here at 114. I said, okay, I'm going to short some at 114.04. I shorted some, or 114.02 or whatever it was, and I just sat on the short side, and then I basically pulled it off last night, right around here before it spiked up into the teens, and I left it alone. I was too busy dealing with everything else, and it did exactly what we thought it was going to do. Now the interesting thing, and I have to point this out before we go over to the back over to the other majors. Okay, here's the dollar index, and the dollar index bounced perfectly off of its 618 retracement. And the interesting thing about the dollar here is, and this is why I was so adamant about being long the dollar down here, and why I didn't stick to my guns completely is just beyond me. But anyway, is that we're getting close to a lot of major support. So the 618 retracement is really very important, and it's always been very important to me as far as a fib level goes, and it's it's the golden fib, and so whenever we get there, and as we've drawn out, even on the intraday stuff, we're just looking for bearish wedge, hit the 618 and bounce. It's exactly what happened. But this move, cannot be ignored now, and I think it's important that we realize how bullish of a move that you're starting to see, especially if the dollar builds on this. Now, there's something that's, in my opinion, that's developing quite um, some important developments that are happening today that cannot be ignored. And one of the bigger developments out there right now is how we're starting to see weakness in crude. Gold rejected at a key resistance. Silver, rejected at a key resistance as well. After completing its 618 retracement, you've got the S&P that looks pretty weak, and if the dollar starts catching a bid on risk aversion, you could really see the dollar bounce from current levels. All right, so keep that in mind. All right, let's go back into the euro dollar, and the question is, what do we do with the euro, because the euro is really at support. We talked about 113.20 yesterday as being really key support. So listen, if you want to be long the euro right now, this is the place to do it. Your risk is very manageable from here. All right, I'm not saying that you should be long the euro. I'm just saying that if you're going to be long, your stops can be very close, like 20 some odd pips away. And if you're looking for a bounce back up to 114, now frankly, I would love to see a bounce back to 114 because I would sell the euro because I was stupid enough to let go of that yesterday. But that's going to be a really key support today, because if we break through this 113.20, okay, spike low down here is 113.25. We break through that, 1250 is going to come, and 1250 is the breakout point, which I'll just redraw this. This is the price where I personally I would like to be long the euro dollar at 112.50. Okay, so 113.20. I'll write 113.20 is going to be key support. Now resistance, I think anybody who is not short the euro is going to be happy to short it back at 114, but I'll write down 114.15 as key resistance as well. All right, we are in a range environment. All right, okay. Let's take a look, man. Gonna be careful of crude here. Crude looks pretty weak. Let's take a look at the cable. Now the cable, what did we write down as support yesterday? 144.70? 144.70? Okay, that's not really that far off. I mean, you look at how we slumped, from 46. We've made some long wicks below, but basically we're on support here. And I'm gonna reiterate. And let me draw this out. I'm gonna reiterate. I'm leaving the pound alone. Now that I got stopped out of the pound New Zealand, I'm leaving it alone. There's no there at this point in time. There's no reason for me to have cable exposure from now until the next couple of weeks. Now, again, if the euro pound gets up to 80 pence, I would consider it. But right now, no real reason. Okay, no real reason at all. 146 to 143.50. That's it. Just trade the extremes of this range if you want, but try not to get stuck in the middle of it, because you're going to be extremely frustrated getting caught through here. Sell it at 146, buy it at 143.50 if you really feel so inclined to trade the cable. But I think it's a dangerous game while you're in the middle of that range. Okay. And with that being said, I'd like to bypass it because I think it is it's too dangerous to be trading the cable right now. Like I said, I'm done with cable exposure. So the dollar Swiss. So the dollar Swiss is seeing a bounce today, which is interesting. You would think the opposite as, equity markets are under some pressure today. You would think that the dollar Swiss may continue to come under pressure. But what we did is we stopped, not here, but I'm going to leave that there. We stopped at the 127% extension of this last move higher. So you see that spike low to the high, 127% extension, that held. So those lows at 95.80 is support. Now, resistance, okay, resistance on rallies, just like we talked about yesterday. I think if you really want to trade the Swissy, it's ahead of the Brexit vote, maybe getting short on a rally would be the place to do it, or be something to do here. So I'm going to leave that right there. That resistance comes in at 96.60. That's probably not a bad place to be on the short side of, hold on really quick. I bought a little bit more Euro Canadian. Okay. Because crude oil looks like it's flagging, just so you guys know. All right. Resistance comes up here at 96.60, and I think if you want to be on the short side of the Swissy, that's probably a good place to consider it. I'm personally not trading the Swissy, probably not till following the Brexit or no Brexit. If there's no Brexit, I'm buying the pound Swiss. Okay, that's what I'm going to do. I'm going to buy the pound Swiss. Jasaha, excuse me if I mutilated your name, asked me to look at the Euro Swiss. I will look at that a little bit later. After I'm done with all the majors and stuff, I'll look at it for you. All right, so there's the Swissy. The dollar yen. You have to be very careful with the dollar yen. All right, first and foremost, let's go over to the Nikkei. This is a very important chart if you're trading the dollar yen. Here's the Nikkei, and you notice we're in the apex of this triangle, right? There's the Nikkei. Now, if you're trading the dollar yen, you got to keep that in mind, or any of these yen pairs. I actually started buying some yen yesterday. I was shorted some Canadian yen, and I'm short some New Zealand yen from this morning. But look at the yen here, and I'm not trading the dollar yen per se, but look at how we are closing in on this, what I consider pretty key support now, because do you see those spike lows? That's at 106.35. We've been as low as 106.25. So that low here is at 106.25. So I'm going to actually take this yellow line, I'm going to bring it right over here. That 106.25 is very key, because if we break through that, now you got some flag patterns. And flag patterns are and could be very much in line with a breakdown in the S&P or a break lower in the S&P. So whether or not we go to 105 or, heaven forbid we start, traveling towards 102.50, this dollar yen is extremely dangerous looking, and I think you have to keep a very close eye on these yen pairs. So 106.25, and I'm going to put in an asterisk because that is key support. We break through that, that is going to be your clue that things are about ready to get gnarly. By the way, are you guys watching crude? I have to bring this chart up here. Okay, here's crude. Okay, here's your flag. This is very, very important support. If this breaks, what happens if this breaks? Well, what happens is you now create a lower low. Okay. If you break through here, you have a lower low, and if you have a lower low, then you have now changed the the dynamics of what we've been seeing of higher highs and higher lows. So be careful here. You know, if we start breaking through that support, and it looks like we are hitting lows of the session. Hold on. Canadian new highs. Yep, crude just hit new lows. All right, crude's breaking lower right now. Hold on, I'm just adjusting stops. Okay. Wow, crude's really breaking down here. God, I feel like I had to add to my Norwegian krona exposure. Stand by. I'm just adjusting stops. Canadian new highs. Man, crude is not looking healthy. All right. Anyway, oh shoot. Hold on. No, 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 no. Hold on. I almost got limited out of this Canadian yen. Hold on. I have to adjust my limit order. Hold on. Okay. Okay. All right. I have to adjust some orders there. This Canadian yen is looking pretty ugly. Nikkei is looking pretty ugly too. Sorry, guys. I just had to make some adjustments. Okay, what was I saying? Where are we at? Dollar yen. Okay, so dollar yen. So what's going to take this downside pressure off the dollar yen at this point? Well, look at how steep. And let me. I don't want to remove all this stuff, so I'm going to actually have to leave it. But let's talk about this steep. You know, I mean that's a pretty steep trend, right? Okay, so we're going to have to break back above like 107 to really take off this downside pressure. Frankly, it's looking bearish again. I mean, you know, and we're approaching like some really key supports, and with equities looking weak and everything else, I'm just going to say you got to be very, very careful here. Okay. All right. Dollar yen. Where am I at? Okay, so dollar yen. Let's go look at the Canadian here. So the Canadian, you know, I'm long the dollar Canadian. I've been, and I came really close to my stops just 2 days ago or yesterday, and my stops are down here, and I've added to my Canadian crosses like the Euro Canadian, Aussie Canadian, Um, you know, the dollar Canadian picked up a little bit, but not a lot more, just because crude's, you know, like I said, we're now making lower lows, which is, you know, technically pretty pretty dangerous for crude. Okay, um, we came out of a wedge. So the question is, now that it looks like this 127% extension has formed as a low, and the 38% retracement more on a longer term basis, you can see right here. Um, the 30, oh, you know what? The 38% is on a monthly basis. Let's just take that out. Okay, so we had the 127% extension. We didn't quite hit the 786, so I'm going to remove that. Question is, how far can this Canadian go, especially if crude's really starting to break lower? Um, this is going to be really key resistance today. I think everybody knows it. That comes in at 2771. So 2770. Okay, that's going to be resistance today. It's be pretty key resistance. All right, we're still in a range. As much as we've come down, it's still, you know, really in a range environment. But where's support? Okay, so where's support? I personally, I think any dip to 75 or 75 to 127, you know, you're going to have buyers now coming in. Okay. All right, let's do the Kiwi really quick. All right, so the Kiwi holding up very well. Now, I'm gonna tell you, is as long as we're above 70, which is right here, the 70-70, the thing is going to be very, if you guys are trying to short it or whatever, it's going to be very frustrating. But if we break through 70-70, we're going to start filling gaps. All right, so 70-70 is key support today. Resistance is going to be 70-50, 71-50. I'm sorry, and I think that's key resistance. And it just be really 71-70. That's good, or 71-50. Personally, I think the Kiwi is going to try to play a little bit of catch up today to the rest of the market. But you know, and by the way, I'm going to put range for now. Now, the reason why I'm going to do that, just if you guys missed the longer term view of the Kiwi, so I'm just going to share with you this chart really fast. I'm going to leave you with this. Okay, we're at a 38% retracement from the fall on the highs of 2014 to that spike low, and depending on your data feed provider, it might be a little higher, but mine and a couple other brokers, we currently see that at 71.35. From the high before this drop in April, May of last year to the spike low, that's a 618. Again, the spike, it's going to differ from broker to broker, so you know it depends on, you know, what your broker's given you. But also, we have a trend line of these highs that come into play right basically at 71 cents, roughly. You have previous support from way back in 2012, spike low, or 2011, excuse me. That comes in basically right at today, or the highs, or the 71.50 as well. So ton of resistance up here. That's why if we break above 71.50, it will turn bullish. Okay, if we do. All right. All right. I'm going to put you right there, and I gotta run to the restroom, so I'll see you guys back here in a few minutes. Thanks. Hi traders, this is Blake Morrow. You are listening to the Morning Edge webinar. I'm back. Let's go ahead and so we were just doing the Kiwi, and the Kiwi, the Kiwi is holding up very well. It's holding up above 71 cents right now. It's holding up very well despite the weakness that we're seeing in equity markets and crude. Hey, you guys got to keep an eye on this copper really quick. This is something that should be on everybody's radar right now. So let's go over to look at copper. Copper, and let me we can actually take this and bring this over here. Okay, copper really has some key support that we're coming up on, and just keep an eye on it because it has really underperformed the market, and in this whole rally, and copper is one of those asset classes that if it starts breaking, we have to pay attention to it, because a lot of people are going to start asking the question, the inevitable question, why? Why is it breaking lower? All right, so keep your eyes on copper right now. Copper is closing in on some support. Okay. All right, and like I said, we're going to continue on. All right, now with that being said, let's go over to the Aussie, because the Aussie has moved lower overnight. We stopped at the 50% retracement. Remember, this is previous support. Okay. Previous support, current resistance, even following the RBNZ, it stalled at 75 cents and then reversed. All right, 74 cents is going to be very key support today for the Aussie. All right, so I don't expect that to be broken unless equities come under pressure. So I'm going to put that as support here. And this is obviously pretty key resistance, and we are in a range. I mean, we've been moving higher, but ultimately, in a bigger range. All right, and all we did is we just backtracked 50% of that range. Okay, let's take a look at the dollar index. Okay, so you guys know the dollar index. We talked about how important this 93.50 level was. Now look at how aggressive this rally has been in the dollar. Now let's reset this. Okay, and I'm going to delete all the stuff that we've been drawing the last few days, so you can see. Question is, now, what do we do here? I would venture to guess that this. Here, let me delete this. This is going to be really important resistance on the way back up. Do we make it all the way back up here? Probably not today. Probably not today, but it is worth noting. And so 94.35 is 94.35 is going to be really important resistance on the way back up. Okay, I know there's going to be some resistance ahead of that, and probably you guys are like, well, how about this level? How about that one? I really think this previous support, and that I'm assuming, and let's just go ahead and. That resistance is going to, it's the 38% retracement all the way up there. But oh man, sorry, I just looked up to see copper. The Nikkei looks like it's trying to break lower too. Be careful, guys. All right, 94.35 support. I hate to do this to you, but it's 93.35. So 93.35 resistance, 94.35. I know that gives you a lot of leeway, you know, but man, it is what it is. Okay, it really is. I mean, you know, it's if you want to, if I'm not going to draw it all out, but if you want to be on the short side of the dollar, probably up here is a better shot. And if you want to buy the dollar, you buying a dip down towards 93, probably like 93.50 or 93.35 would be a better place to do it. Right now, it's a tough call, you know, because the question is, what's the dollar going to do if stocks come down? And when I say if stocks come down, I mean look at here. Just here's the DAX intraday, right? There's the DAX intraday. Here's the here's the Nikkei. The Nikkei looks vulnerable. Just intraday, you know, I'm just giving you guys some very intraday looks. You know, you look at the Nikkei, it looks vulnerable. You know, you go over to, you know, the Dow futures. I mean, the Dow futures already look like they're trying to break lower, right? You know, it looks like we're already flagging there. You go over to the E-minis. The E-minis, again, look vulnerable. You know, so the question is, if stocks sell off, what does the dollar do? Yeah, that's the question. I mean, I know the dollar yen's going to go down, but what does the rest of the dollar complex do? And that's the you know $1,000,000 question, which I don't have an answer for you at the moment, and that's why you have to be kind of broad with the dollar index because we don't know how the dollar is going to react and risk off. I've been seeing signals both directions. Now, one of the currency pairs, and I picked this up yesterday, just above where we're at 18.25 yesterday. This U.S. dollar Mexican peso, if risk aversion starts to pick up, you know, we're probably heading back towards 18.35. Now, 18.18 is probably decent support for today. And 18.35 would be resistance, right? 18.35, just way the hell up here. But like if we're flagging, you know, if we're flagging, this might be, you know, just a flag pattern building, okay? Very well could be. All right. You know, if it's a flag pattern, that'll play out pretty well, like this. That'll play out right to that 18.35, roughly, maybe a little higher, but you get the drift, especially if we come down just a little bit. All right. U.S. dollar Norwegian krona. Somebody asked me, I think Eric asked me, you know, why is the U.S. dollar Norwegian krona up so much? Well, you know, there was no news out of Norway, I don't think. Let me double check. I remember looking this morning. No, we didn't have any news out of Norway, so this is all crude oil related. This whole move right now is crude oil related. So, you know, as crude, you know, breaks lower, you know, the U.S. dollar Norwegian krona is trying to break higher. Now it's obviously coming down right now, but I think you want to use a dip to pick this back up, right? $8.14. I'm trying to look at some. Yeah, maybe 814. Whoops. There's a range too. Resistance, 8. Well, it's going to be those highs. But really, $820 is going to be your 38% retracement. So $820. Even if we hit new highs. Let's go over to the Swedish krona. All right, so here's your Swedish krona.